Welcome everyone to SQE1 window. Here we got chapter 6, dishonored checks and client money risks. That's what we need to understand. Sometime it happens that we pay for client gives us checks and checks are bounced at that point or dishonored. So that's what we need to look at in this chapter or in this session. So what actually happens when a check bounces and how this affects client money, the client ledger, and the firm's regulatory duties. A dishonored check seems simple, but it creates a risk of shortages in the client account if the firm has already spent money on some matter. The key idea is that once a check is dishonored, we pretend it never existed in the system, and the accounting record must reflect that immediately. So you have spent your money, your firm's money, business money, and you need to correct it and you need to put that money back to client account. So it happens like, in practice as solicitor, a client gives you a check and afterward you pay money in advance before the check is cleared. Check is dishonored and now you need to put money back to client account from your business account. So recording a check when first received, once you receive a check, so when it arrives, the firm brackets it even before the bank clears it. So if it is firm's money, so it will be debit cash account business section and credit the client's ledger business section. If it is client's money, then you need to debit cash account client section and credit client's ledger client section. This entry simply shows that the firm expects funds to arrive. Nothing has cleared yet, but the ledger temporarily reflects the expected balance. That's it, not more than that. So, what happens when the check bounces? When the bank rejects a check, the original entry must be undone because the money never actually reached the account. So, for a dishonored business check, we reverse, and that will be debit the client ledger business section and credit cash account business section. For client check, you need to debit the client ledger client section and credit cash account client section. So in this way, once you do these steps, this restores the balance to what it should be if the firm has already spent money. So against the expected amount, a deficit will now appear. So at that point, so why this rule 8 matters? So this rule requires all records relating to client money must be accurate and up to date. When a check bounces, the firm must update every affected record without delay. Once again, promptly leaving incorrect entries create the risk of an artificial balance on the client's ledger, which then hides shortages and breaches. So here, this slide exists to remind you that dishonored checks are not just numbers. They are an immediate compliance issue. You need to do it. As I talk, like in property, it is location, location, and location. And here in practice, legal practice, it is compliance, compliance, and compliance. So drawing against uncleared checks, understanding the risk, what we need to look at, that is rule 5.3, and that is strict. Solicitors only withdraw client money if there are sufficient cleared funds for the particular client. You cannot use one client's money for another client, although you got money in one account at that point, but you need to look at ledgers very carefully. Does this specific client got money, ready money in the account? So if the firm pays money out before the check clears, they are effectively using other clients' money. If the check later bounces, the shortage becomes real. This is why drawing against uncleared checks are one of the most common ways firms unintentionally breach the account rules, especially when they have load of work and they sometimes intentionally or unintentionally, if they do something like this, of course they are responsible and liability is very strong against them. So when things go wrong, the common breach scenario we just look at, the classic breach is simple. A client's check is paid in, the firm assumes it will clear. They send the money for the client and the bank later rejects the check. So at that point, the firm has created a deficit on the client's ledger. So under Rule 6.1, the firm must immediately top up the client account from its own business account. The rules do not allow delays, explanations, and negotiations. The shortage must be corrected at once. That's it. So we got an example here that is recording the check from Mr. Edward. Here the firm receives a check of £1,000 from Mr. Edward because this is client's money. The double entry on receipt is you need to debit cash account £1,000, client section, and credit Mr. Edward's ledger £1,000 in client section. So this shows that the firm expects to hold 1,000 for Mr. Edward once the bank confirms the fund. Nothing is spent yet. This is just the expected position. So now we got another example, payment of £700 for the client before clearing. The firm then pays £700 for expenses for Mr. Edwards before £1,000 check is clear. The entry is debit Mr. Edwards ledger £700 client section and credit cash amount account £700 client section. This reduces the balance held for Mr. Edward to £300. It also means the firm is relying on the check clearing. This is where risk begins. So now let's look at example 3, reversing the entry when the check bounces. The bank then dishonors the check. The firm must reverse the original £1,000 receipt. So now how to do it? We need to debit Mr. Edwards ledger £1,000 client section and credit cash account £1,000 client section. This removes the £1,000 that never actually arrived. However, because 700 was already spent, the ledger now shows a shortage, of course. The client ledger will be negative unless the firm corrects it. Now let's go to example 4. That is correcting the deficit to avoid a breach. To repair the shortage and comply with Rule 6.1, the firm transfers £700 from the business account to the client account. So first, record the money leaving business account. So you need to debit Mr. Edwards' ledger £700 in business section. Credit cash account £700 in business section. Then another 2 entries that we got it, record same £700 arriving in the client's bank account. So that is debit cash account £700 client section and credit Mr. Edwards' ledger £700 in client section. These entries restore client ledger back to 0 and fix the shortage properly. That's what you need to do because you did not wait for the check to clear, paid it, now pay it back from your business account. So now the client pays again. So mixed payment, when Mr. Edward pays another £1,000, this becomes a mixed payment because part of it replaces the deficit and the rest belongs to client. Good job, Mr. Edward. You paid us money. The firm may either pay the full £1,000 into client account and then transfer £700 to business account. So this is one way, like sensible way people do it. Or split checks immediately, £700 to business and £300 to clients. Whichever method is chosen, the ledger entries must reflect that 700 belongs to the firm and 300 belongs to the client. So that's what you need to look at, and we have put all these entries on this slide if you want to have a look in both ways, option 1 and option 2. If you want me to read it, I can read it, like pay the full £1,000 into client account initially. So it is debit cash account £1,000 client section and credit Mr. Edward £1,000 client section. Then transfer £700 out of that client account to business account. So you need to debit Mr. Edward £700 client section and you need to credit cash account £700 client section. So these are two entries when the money is moving from client account. And now you need to debit cash account £700 because money is arriving in business account. So debit cash account £700 in business section, and then credit Mr. Edward £700 in business section. So this is how it works in option one. Once you just take all £1,000 in client account and then move your £700 to business section. And once you want to split it, then you can split the payment immediately. At that point, you will be debiting cash account £700 business section and credit Mr. Edward £700 in business section. Then you will be debiting cash account £300 in client section and crediting Mr. Edward £300 in client section. So this is how you can do it in both ways. So yeah. So the next thing is practice tips. The best habit is simple. Never assume a check will clear. Always wait for actual cleared funds. Always reverse dishonored check and entries immediately. Always replace any shortage from business account at once. Remember that nearly every breach involving checks begin with overconfidence and ends with a preventable client account deficit. These examples show what goes wrong and how to keep the account compliant. I hope this helps. If you don't understand anything, go back to these slides and be with us a little more and you will understand it. I wish you all the best. Please, please don't get that scared of these, SQE and, this uh, solicitor account. Once you understand the game and puzzle, you will love it. I wish you all the best. Ta-da for now.